So I want to talk about earnings for a few minutes here. Earnings season is in full swing. We are in the final week of January. The final week of January and the first week of February are going to bring with it some of the largest companies out there, especially by market cap, that announce earnings. And when I think about large companies that announce earnings, this is what I'm looking at here, folks. I pulled this. This came from Bloomberg. And it shows, this is just 6 of them, but these are the top six companies by market cap. And you got Amazon up there at the top. That's almost $2.5 trillion in market cap. This was coming into this morning. Google, $2.46 trillion. Apple, $3.35 trillion. Microsoft, $3.3 trillion. Meta, $1.6 trillion. And there's NVIDIA topping the list, at least by Friday's close, of nearly $3.5 trillion in market cap. I remember not too long ago, the race to 1 trillion. Now we're looking at the race to 5 trillion and then the race to 10 trillion. And so I bring that up because these are companies, scratch NVIDIA from the list, but these are companies that are going to be reporting earnings very soon. Let's talk about 4 of them that are going to be reporting this week. We start with Meta, right? META. And coming into Friday, you can see that Meta was jumping up to new multi-month highs here at topping $650 a share. Now you got two lines on the screen you see right now. The first one is the candle line. That's the candlestick chart. That is actually the stock chart of Meta with some Fibonacci on it. All right, I'm going to explain Fibonacci in a later session. But today I want to talk about the second line, which is the red one. This is the implied volatility. This was option traders are looking at as we come into earnings for each individual stock. So as you can see, with Meta reporting on the 29th after market close, we do see a potential move up. Volatility is on the high, slightly high side as we come into Meta. Number 2, we see Microsoft reporting also on the 29th. And we see Microsoft now having what we call average implied volatility right in the middle since the last time we reported earnings, which were back in October. Microsoft is not yet near its new highs since we saw highs coming in the middle of December, but they are getting close to where they were. Stock number 3 that's reporting also reporting on the 29th is Tesla. Tesla also had new multi-month highs back in December. It came down and hit some very interesting support levels. Right now, it's kind of moved sideways and consolidating, but option traders believe that it is moving higher as well. And then finally, stock number 4 is Apple. Apple will be reporting on the close of the 30th of January. Now, Apple's had a really interesting move when you take a look at what's happened with its stock price. Since the end of October, Apple was moved from about $220 a share to $260, right? $259.02 to be exact. And since that time, which was right around Christmas, we've not seen that high. We're nowhere close to that high. In fact, we've pulled back. We're down to around 220 as concerns over softer sales during the holiday season have hit this company. You know what else is happening? Not the lows in the stock price, but the highs in implied volatility are nearly as high as where we were back in October when the stock price was falling back down to these levels. Option traders, out of the 4 companies that I just talked about, option traders are most concerned about what's going to happen when Apple reports earnings because it's sitting near highs that the other stocks just simply aren't seeing. Now, the way that most people look at earnings is they look at a stock like Apple and they'll say to themselves, well, the stock is down. It's down. It must be a buy. It's lower. I think it's going to jump back up. Or some traders are saying it's sitting on that 220 low. I think it's going to go below that area. Folks, to be a rules-based trader, we don't use the words I think, right? We don't use I think. We use I research. We use data. And we look for patterns. And the patterns that we're looking for are not buy it right before earnings and then hope that it jumps up or hope that it jumps down and makes our options go up in value. Here's the problem with that. A, you're buying at the highest point. You're paying a premium for those options as high as they're going to be in terms of implied volatility for a lot of stocks like Apple. And number two, you're using an event that already, in most cases, once the event happens, implied volatilities drop. So you have time value that's going against you, more so with these stocks that have higher option premium than others. I suggest, rather than do what I call the Robin Hood approach, all right, which is where the crowd rushes in and buys right before the earnings and then hope it moves in their direction, that we come back and we look at what's happening before the news, before companies take a hold of it. So I don't want to be looking at buying options on Meta or Microsoft or Tesla or Apple. It's too late for those. I want to be looking at potentially buying options, all right, on companies that the crowd is not looking at yet. Yes, I'm talking about companies that report next week or the week after, right? I want to be well in those before those companies come out. And I want to be looking at stocks that actually have patterns, all right? Patterns of moving up in prior earnings announcements or patterns of moving down in prior earnings announcements. Let me give you 3 stocks that have those kind of patterns. Let's do it. These are patterns coming into February, end of January, February. In fact, I'm going to make a little change here because I found these patterns to be bullish. Dexcom, all right. This is a surgical company. They deal with surgical medical equipment. Last closed Friday at $88.75. They are going to be reporting aftermarket close in the middle of February. Yes, the middle of February. All right, February 13th. That's a Thursday. AbbVie. We know what AbbVie does. They're in drugs. They're also in the area of THC. They have a before market open earnings announcement, which is on the 31st. That is very soon. All right, that's that. And guess what? The neat thing about this one is it's not yet gotten exciting about where it's likely to go. So that's a before market opening. And then Affirm Holdings is the third one I wanted to mention. All right. They report after market on February 6th. Now, what do these 3 companies all have in common? Well, we don't know what these 3 or any stocks are going to do after their earnings, but I can tell you what they've done in prior earnings announcements. In fact, the last 4 earnings cycles, the last 4 over the last year, Dexcom, AbbVie, Affirm, you know what they've all done? They've all climbed higher right before their earnings announcement. Okay? Dexcom on average, the options, buying call options prior to their earnings and getting out right before the earnings, right? Not right after the earnings, but right before the earnings announcement. Those call options returned about 34% on average. AbbVie doing the same thing, buying the calls a week prior, getting out the day of, right before the earnings, 41% higher. Affirm Holdings. Here's the interesting one. Affirm, all right? And we know what Affirm does. They're that buy it now, pay for it later e-commerce, computer programming e-commerce. Last 4 earnings quarters, they've ran up in price before their announcement. 98%. The options almost doubled in value. Now, I got to say, out of the 3, the one that had the most time value increase, meaning everybody crowded into the trade regardless of where it was going, was Dexcom. The one that got up and ran ahead of earnings the most was Affirm. Right? If you go back and you look at charts of Affirm, you'll see that it ran up and the options actually got more expensive because they became in-the-money options prior to the earnings increase. Okay? So, to kind of summarize earnings, we've had that earnings calendar coming out of January, coming into February. Gamblers will buy and hold through earnings, hoping for a big gap that's going to outpace the amount of time value they pay for their options. Smart traders will enter before and also exit before earnings day. All right. And of course, you'll see my take on cryptos. You'll get my take on stocks. You'll get my takes on ETFs later in the week.